That would take UK defence spending from the current 2.32% of GDP to 2.5% of GDP, well above the 2% target that NATO sets for its members. Well, speaking alongside Olaf Scholz, the German Chancellor, the Prime Minister urged Britain's European allies to do the same. The commitment has got investors wondering which defence companies will benefit from the higher spending. Well, joining me now to talk about this is Barry Norris. He's founder of Argonaut Capital and manager of the Argonaut Absolute Return Fund. Barry, good to see you again this afternoon. Worth noting that even after this increase, UK defence spending will be still significantly lower than it was in the Cold War era.
Yes, I think if you think that over the Cold War period, British spending on defence will average 5.5% of GDP, and actually since the Cold War ended in 1989, it's been 2.4%. So I think what we're seeing is a gradual increase in defence spending. It's not really enough to significantly move the needle. And I'm actually reminded of the 1930s when in 1932, the 10-year rule expecting no major conflict was revoked. But it wasn't until 1938 that actually Britain started to rearm. And given that rearmament is a deterrent, it was too late by then.
Yeah, it's an ominous precedent, that, Barry. I mean, NATO guidelines suggest that 20% of defence spending is on equipment. Is that going to be enough, given the needs of the UK's armed services?
That's a good question. I think nowadays there's a general trend to higher equipment spend. So those countries in the front line at the moment, like Poland and Finland, are spending 50% of their defence spending on equipment. And actually the NATO average has risen from just 10% to 30% currently. So you would expect a significantly higher amount of the defence budget to go on equipment. And the problem I think that the defence industry has is if actually the UK wanted to immediately spend 5% of GDP on defence, actually the defence industry doesn't have the industrial production capacity to ramp up production that quickly. After all, it's been in a bear market for 30 years where essentially UK defence spend has been flat at 70 billion a year, and they need time to ramp up production. Now, governments are helping in that by better payment terms and by giving longer contracts, but it's going to take time. And obviously, politicians and NATO have identified that the threat is now, it's not in 6 years' time. And so the governments and industry really need to work together to get to ramp up production.
Yeah, it sounds like there's a big dose of inflation on the way then.
Well, I mean, if you think, I mean, the current Cold War, I think, is inflationary in a number of ways. Firstly, obviously, demand for defence spending increases. That governments will try to fund that through borrowing money rather than taxation. And obviously, one of the problems that we face in the West is that most commodities in the world are actually owned and controlled by our enemies, and that's inflationary as well.
Exactly. I mean, if you look at it more broadly, which are the asset classes, apart from defence stocks, that will benefit from this kind of uptick in spending?
Yeah, so I'd say the three asset classes that will benefit are obviously defence industry, particularly in Europe, because that's more geared to European defence spend than US companies. It's gold, because that is a source of outside money, and by that we mean money outside of the Western financial system. So, for example, when Russia invaded Ukraine, Russia had $300 billion of assets which were frozen in the Western financial system. Now, Russia responded by, of course, freezing Western investors' assets in Russia. Now, that should be a shot across the bows, not only for Western investors, but also for those countries that are in this alliance of China, Russia, etc., in that those countries, and particularly their central banks, now don't want to own Western assets and US government debt and European government debt, or even cash deposits in the banking system, and they'd rather own something that can't be frozen and confiscated. And that means that brings you back to forms of outside money, which gold is the most obvious and the most liquid, being a value overall of about $15 trillion.
OK, Barry, got to leave it there, I'm afraid. Thanks for joining me today.
Pleasure.
Some other business news stories for you now. And shares of NatWest Group have